I do have the man of the moment, and many people believe he's the one who's really scripted it all, but in the end it was a team effort. Jayant Sinha, Minister of State for Finance, joins us right here on ET Now. Thanks very much for being with us. Congratulations on what is your first budget. Some of the best minds in the country have put this together. I'm going to be the devil's advocate and just criticize it. There's plenty that the budget needs to be complimented on, but let me just first begin with the critics' view. This is a great visionary document, but this is not the budget for the next financial year. That's the first point of criticism. How will you defend that?
Well, it's been a wonderful team effort led, by our extraordinary captain, the Honorable Finance Minister. And it's been after having been a budget watcher for decades, actually, almost 25 years. To be part of the process and to be able to put it together has been an extraordinary honor and privilege. I think we've tried to balance across multiple dimensions. Of course, we've tried to balance all the different audiences that you have to deal with in a budget, but we've also tried to balance the temporal part, which is the part that you're bringing up, which is how do you ensure action on the ground in the short term versus, in fact, putting in place a long-term roadmap. Now, on the long-term side, we've got at least 2 or 3 things that are genuinely groundbreaking. We've got the cooperative federalism, we've got the changes to corporate taxes, we've got the universal social security that we're doing. Obviously, these will take some time to implement, but they're groundbreaking. Now, in the short term, there are 3 or 4 things that I think are extraordinarily important that anybody should pay attention to. First, we are establishing the National Investment and Infrastructure Fund.
That's right.
It's a sovereign wealth fund, and really by doing that, and in addition to that, enabling 70,000 crores, of which 40,000 crores, as you know, goes into railways, and then enabling infrastructure bonds for a number of our financing agencies, we are making action happen on the ground this year in terms of investment in infrastructure.
Without a doubt, you've made the infrastructure guys very happy. The 2 big infrastructure CEOs who came on our channel said we couldn't have asked for more. So that's a big compliment. Let me ask you the tougher questions, if I may, as a journalist. The second criticism is, this is a budget for corporate India and the taxpayers. It has very little score as far as equity is concerned. What's your defense on that?
Well, the guidance from the Prime Minister was very clear. The Honorable Prime Minister told us that as you put this budget together, make sure that it is pro-poor, pro-farmer and pro-youth. And by pro-youth, of course, we mean jobs, and for that, industry needs to flourish.
Right.
And so we've worked very hard to make sure that these very important sections of society are getting, services, they're getting incentives, they're getting opportunities that simply were not there before. And as the Honorable Finance Minister said, it has to be a quantum jump. It just can't be incrementalism like it has been. And so when you look at each of these 3, whether you look at pro-people, pro-poor, whether it is the social security that we're doing, whether it is a continued commitment on the subsidy side, whether it's food security, Narega, whether it is kerosene, all of those areas we've made more efficient, we've left them untouched. Obviously, we are doing a tremendous amount when it comes to social security, as we discussed, whether it's pensions, whether it's accident insurance, whether it's life insurance. And then finally, when you look at housing also, we've laid out a very clear roadmap of what we want to do in housing. And that's for the poor. That's for 50, 60, 70% of India that is going to be able to take advantage of these services. Right. As far as farmers are concerned, obviously we've done soil health and soil fertility. We've done, tremendous boost in irrigation, and we're going to be doing a lot in agricultural credit, all of which is laid out in the budget. And then certainly with respect to young people and jobs and really ensuring that industry and manufacturing takes off, we've really pushed Skill India hard, we pushed Make in India hard, and we're doing a lot for innovation and entrepreneurship.
I'm going to ask you in Make in India in just a bit, but the heart of this budget exercise was the whole debate between fiscal prudence and growth. You've been pragmatic is what a lot of people are saying, but your critics say that we have hurt our credibility by allowing for fiscal slippage next year and by delaying the whole 3% target by 1 more year to fiscal year 18. Would you concede a little on that ground?
No, I wouldn't concede anything on that ground. I think it's absolutely clear, and if you read, people who are very thoughtful and knowledgeable observers of the Indian economy, they recognize that there was a trade-off here, a trade-off not just simply between growth and fiscal consolidation, but actually the quality of the growth and whether we were able to find the resources for public investment. As the Honorable Finance Minister said very clearly, both in the budget speech and thereafter, we could have hit the 3.6. After all, we did the 4.1.
Right, yeah.
We were very fortunate.
tougher circumstances.
We were very fortunate, of course, that we have, in fact, the tailwinds of lower commodity prices across the board. So that has really helped us in terms of fiscal consolidation. But rather than get down to 3.6, which was entirely possible, we chose, in fact, to take the extra incremental spending that we were getting as a result of being able to spend 0.3% of GDP more and really put that into public investment, largely because of what you were saying earlier, which is to ensure that the public investment boosted the economy in the short term and enabled us to really turn the investment cycle and move the economy forward into that 8, 9, 10% growth rate trajectory that we think is entirely possible.
Your critics will perhaps be silenced if you put all of that money to good use, into productive use like infrastructure, which is of course something that you will best answer a year from now. But the quality of fiscal consolidation, if I may point out here, the whole revenue to fiscal deficit has now been increased, was 70 earlier, it's 72% now. Planned expenditure is less, and that is somewhere where a lot of people are losing sleep over. Explain to our viewers, why is planned expenditure less in this year's budget than last year's?
No, that is simply because of the devolution to the states. If you look at what are called budget estimates, that is what we had planned for last year as far as planned expenditure is concerned, that was 5.75 lakh crores. What we actually spent, and that's called revised estimates, or RE, was about 4.7 lakh crores. What we are planning for, because we've of course taken a lot of the revenues that the center has and we've sent it to the states. What we are planning for actually in the next fiscal year, and that is of course again the budget estimate, is about 4.7 lakh crores a year. So it's marginally lower than what we actually spent this year.
Is that largely on account of the Finance Commission's report that has been put into action?
Because as we had said during the Finance Commission discussions and press conferences that we had after we tabled the Finance Commission report in Parliament, is that there was 1.78 lakh crores that we would have had for planned expenditure that has actually gone to the states. That's the 1.78 lakh crores that's missing from planned expenditure, and which would have been added to the 4.7 that we are actually going to spend.
Because the criticism was that the government is almost abdicating its responsibility and asking corporate India to crowd in, which is perhaps what you're not looking at doing.
No, actually that's not true.
Yes,
the Honorable Prime Minister has said very clearly that we are Team India, right? And so we all have to work together, the states and the center.
I'm going to now focus the attention just a minute away from North Block. That's where all the action today is, but just away from North Block to Mint Street. Your good friend Raghuram Rajan had said on record that the next milestone on rate cycle will be the quality of fiscal consolidation. You've been pragmatic. You've delayed it by a year as far as the 3% is concerned. You've allowed yourself some fiscal slippage in the quest for growth and infrastructure investments. Is he going to buy that argument?
No, as I've said before many times, the RBI is a very professional, fact-based, data-driven organization. And I think the data is very compelling right now when it comes to monetary policy. Because if you look at the structural change that has happened in inflation expectations, the Economic Survey has an outstanding chart in this regard. And I would commend everyone to take a look at that chart, because basically it just shows this dramatic fall-off in inflationary expectations among consumers. So clearly because of the commodity price declines, because of what has happened in terms of what we've done with MSP, which is the prices that we are paying for various agricultural commodities, and because of the change in inflationary expectations among individuals, we have of course given tremendous sort of space for monetary policy to begin work, because inflationary expectations are down as much as they are. Secondly, if you look at the quality of the fiscal consolidation that we are going through right now, I think Dr. Rajan himself on record, as well as all the rating agencies and others, have very clearly said that it's not so much that they're looking at a number.
That's right. They're looking at the quality.
They're looking at the quality. And if we have taken some of that savings, that 0.3% that we could have used to bring it down to the 3.6, which is what the roadmap was, if we use that actually in a pro-growth way to stimulate the economy through public investment, that they would look at that in a very appreciative way. And I think that's how it will be considered.
So more rapid rate cuts should come in?
That is a question the RBI can answer.
You've also spoken about the new monetary policy framework in this budget. You've arrived at a 6% figure. The RBI was at a 4% figure. Is there dissonance? Has there been meeting of minds? Has there been a dialogue already that the number has been arrived at? Because people are going to read a lot into, once again, North Block versus Mint Street on this aspect.
Well, I think that's something you all in the media very much enjoy highlighting, and of course none of that exists. There are many, I think, interesting things, good things in the budget, and that's one of the very important ones. The reality is that we have now put in place what I think is absolutely world-class global standard in terms of monetary policy development, which is to really put together a monetary policy agreement between the Ministry of Finance and the Reserve Bank of India, where we are taking on a flexible inflation objective. And as you know, that's been set out at 4% plus minus 2%. And I think we're very much headed in that direction. So I think this is particularly for people that are in the capital markets, to think about where the currency is going to be at, the stability of particularly our bond markets and so on. It's going to be very reassuring for them that we've taken this very, very, very notable, significant and important step on monetary policy.
Just before I turn focus, I want to speak to you a minute about the capital inflows. The control of equity flows has been taken away from the RBI by changing the FEMA Section 6 Act. How should then RBI now manage the exchange rate? I mean, that is primarily RBI's focus. You've taken away the authority. How are you going to justify that?
No, there's no question of justification. In any case, de facto, not de jure, but de facto, effectively the control of equity flows was already with Delhi in a way, with Ministry of Finance, Cabinet, DIPP, etc. That's effectively where the decisions were being done, and RBI was just essentially looking at that and observing it as opposed to truly controlling it. So we've actually moved it now de jure along with de facto here, because that is a decision that is a DIPP decision, not necessarily an RBI decision. Now RBI still maintains full control on debt flows, and of course is still the regulator of the bond, currency and derivative markets, and so in that sense they have all the instruments that they need to actually manage the dollar inflows or currency inflows.
So you do not believe by this one move the RBI has been incapacitated to manage the exchange rate, so to say, like a lot of critics have again pointed out?
I think that's the media and people in the media just kicking up a storm when none exists.
You wanted to take the tough questions, so I'm throwing some of them your way. Just to talk about the foreign investors and just to talk about the inflows, the budget says, the budget has spoken about that at length, and some of your critics say that you've been far too kind to foreign investors. The whole FDI and FII composite limit now, that in a sense is not very good, because you're going to attract a lot of fly-by-night operators, a lot of hot, volatile money into India against the long-term capital investments that would have come in. What's the defense there?
I think again,
should you not have just done away with the whole?
I think these are very unfounded criticisms, and in fact display quite a lot of ignorance about how these markets actually work. As you know, I have been a long-term participant in these markets and know them quite well. The reality is we live in a very competitive global economy, and for us to be able to ensure that we are an attractive destination for investments, and by the way, I mean for that not just from foreign investors but domestic investors as well. Today the Tatas are putting up a Jaguar plant in the US, right? They're putting it up in the US. They could have put it up in India. They could put it up in China. They could put it up in Vietnam. Anywhere they want. Now this is a domestic company choosing to make an investment in the US, which is perfectly fine. They should absolutely do that because it's in their best business interest. So we have to make sure that it is in fact in the best business interests of companies, both foreign as well as domestic, to do business in India and to create jobs in India and ultimately to create prosperity for all of us. So one of the very important things in this budget, and I want to pause here, because I want people to truly understand this, right? What we are trying to do with this budget is to really put in place a modern 21st century economy here in India, and to ensure that our tax regime, our regulatory regime, the quality of governance that we have is on par with the best in the world. We want to meet all global standards. This has to be a 21st century economy that we create here, because we are really not just thinking about the next 5 years, but the next 20, 25, 30 years. All these decisions today will kind of ripple through and resonate through for all these many years. So we really are thinking that way, and in that regard, it's very important for us as an economy to be both globally competitive, right? Which is why we are doing
global standards.
Which of course that's the global standards part. To be globally competitive, but at the same time, and this is another very important part of the budget. I'm not sure whether the people have fully appreciated the degree to which I think we move forward in this regard. Is to be innovation driven. So we're going to create a globally competitive economy that is innovation driven and position us therefore as being one of the leading economic powers of the 21st century.
That's a very good point to point out to my next question, and that is GAR. You have deferred it by another 2 years. It's controversial, and like your predecessor, Mr. Chidambaram, has said that if you actually put an untrained person to manage GAR, it is going to be disastrous. So a delay is welcome. What some critics point out is that you're moving towards a soft, quiet burial.
I think that was Mr. Chidambaram who said that. I don't agree with him very often, but as far as GAR is concerned, he's got at least the semblance of a point. Very often he doesn't even have that, unfortunately. But in this particular case, the reality is that GAR is a perfectly appropriate set of issues to consider and to evaluate, because you don't want people to be avoiding taxes, and that avoidance of taxes very often blurs into evasion.
That's right.
Of taxes.
Yeah.
So you really have to understand those things in totality. You have to consider them comprehensively, and then you have to bring in place appropriate safeguards against that, which of course your tax authorities and your tax administration know how to deal with. So at the same time, you also have to remember that we've been very clear with respect to our tax regime, where we said, unlike the previous regime, that we will neither be arbitrary, not capricious. Yes, we want to be simple, we want to be clear, we want to be predictable. And therefore, in that regard, we've said, look, we're going to defer this for 2 years. We're going to examine it closely. We're going to understand what the issues are. There are legitimate issues here as well. Of course, it's disruptive to participants in the market. We'll take all of that into account, and then we'll come up with a decision that people, I think, will be quite comfortable with, and it will demonstrate the stability and predictability of our tax regime.
One more question on tax before I move to the infrastructure fund that we spoke about, and I said I'm going to return to this. Was ending tax terror one of the things that were paramount when you were scripting this budget?
Sorry, just say that again.
Was ending tax terror, you've said we want to be non-adversarial, we want to go ahead in a transparent way, predictable taxation. Was ending the tax muck, so to say, somewhere on your mind? Because A, you've done away with the whole transfer
No,
pricing.
of course, Supriya, of course it is. Both the Honourable Prime Minister and the Honourable Finance Minister have said very clearly over and over again that we want to end tax terrorism. We need to have a simple, predictable, fair tax regime, fair for corporates, fair for individuals. Of course, we understand that there is a real tax problem in India in terms of tax to GDP, so certainly we have to solve that. But we have to solve it in partnership with our taxpayers, and therefore we want to end the tax terrorism. We want to end the discretionary aspect of some of this. We want to end, some of the corrupt practices that we've all seen as a result of all of this. And so we want to take discretion out of that. The Honourable Prime Minister has said often, and he said in Parliament yesterday in an absolutely extraordinary speech that he gave, that we need a policy. A policy-driven state, and that's what we're working towards.
Fair point indeed. I'm going to come back to the whole infrastructure thing. I did say that the two of the biggest CEOs in infrastructure came and said, we couldn't have asked for more. Let me go back to the critics. They say the National Infrastructure Investment Fund, very welcome move. But guess what? We already have something called the NIF earlier. This is just old wine in new bottles. Defend yourself.
I think that's, unfortunately very often what happens is in these budget discussions, and having been a participant in these for a long time, you have people who, are just reacting off the cuff without really even just not the fine print, but certainly not even reading the big print, right? If they had read the big print, they would have immediately realized that it's a completely different agency that we are setting up. And I think this is another one of those things in the budget speech and in our policies that is truly game-changing as well. I mean, in effect, this is going to enable us to be able to lever up 20,000 crores a year. This trust is going to get 20,000 crores a year. Once we have the 20,000 crores a year, as the Honourable Finance Minister said, we lever it up. We could potentially lever it up 4 times, 4 times.
And you finally need an instrument for sovereigns to come and invest.
We have an instrument for sovereigns to come and invest. We have an instrument to own certain assets that we can use to unlock the government's balance sheet. We also think that there's going to be an important sort of mirroring effect in this, which is that if we are able to create an agency like this that works well at the central level, there is no reason why some of the other states that are actually quite progressive and capable, like in Gujarat or Maharashtra and so on, that can set up an agency like this at the state level as well. And so we have a way for us to be able to take the balance sheets that exist at the union level, at the central level, as well as at the state level, whether it is a stream of dividends or other sort of budgetary support that they get, plus certain assets that they can throw into it, land holdings, ownership of various companies, listed, unlisted, whatever, to be able to create something that can then become a true force to drive public investment, private investment.
I'm glad you mentioned holding in certain listed, unlisted companies. I'm being given cues to wrap up. I'm just going to take two quick last questions. Selling stake in Suti is something that you say in the fine print. Divestment target has now been increased to 69,500 crore rupees. Do you believe, or don't you believe, this is going to be a little destabilizing for some of the blue chips that you're invested in, and L&T and ITC, companies like that?
Well, Supriya, where we are going with this investment is to be able to put together a really intelligent, thoughtful plan about which assets to dispose of in which fashion. There, I think everything is on the table. We want to look at disinvestment. We want to look at strategic disinvestment. Those decisions are going to be made through comprehensive policy that we are going to put together. Obviously, it will be approved by the cabinet, and I think you'll see real success from that, as we've already seen so far, and which is why we were very confident with the target that we had put up there.
My last question to you, some of your critics have pointed out, I haven't been as critical of the budget though, just a disclaimer, but some of the critics have pointed out that this whole emphasis on pension, on the social security schemes that you're talking about, is just an image makeover exercise. Hey God, we're not big business oriented government. How much of that is true?
Look,
they just play on your mind at all.
Our Honorable Prime Minister has been crystal clear in saying कि ये गरीबों की सरकार है और गरीबों को समर्पित है. Our focus is the people of India. This is a सबका साथ, सबका विकास, सबका लाभ budget, which is why we are calling it the Sabka budget. It's for everyone. Certainly, when you look at an economy, there are many stakeholders. Obviously, it's the first and most important priority, even at a moral level, for the government to make sure that those that are needy, those that are deprived, are able to get support and security with respect to their basic needs.
For me, the view that matters is Swaminathan Iyer, and he said this is a good, very good budget. So I think you've passed with flying colors. I have a last question to ask of you. Was sleep difficult to come by in the last 10, 15 odd days as you were in the thick of budget making?
Not at all.
Such mounting expectations?
Not at all. I'm a very good sleeper, and again, as I said, it was extraordinary to be on this wonderful, wonderful team of people working here in Ministry of Finance. We had very clear guidance and leadership, both from the Honorable Finance Minister and from the Honorable Prime Minister. So it was actually a very, very fun, and I think with the results coming out as they are, an experience that the country can appreciate.
You're not the first in your family to be a part of the budget making exercise. Whose view mattered the most on this very important, crucial exercise of your life?
That's a secret I'll tell you later.
Thanks very much, Mr. Sinha. Pleasure talking to you.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.